Hey everyone, I am super excited to have with us a very special episode. We have a collaboration of three good friends, they're also competitors and great colleagues. I am honored to call each one of them a friend and, God willing, do many deals together with them. Each one of them, in their own right, is a superstar, and we're going to hear all about them, what they do. Without further ado, I wanted to introduce three friends: Jordan Siegel from RedPoint, James Green from CRV, and Morgan Gerlak from TCV. Welcome to the show.
Thanks for having us.
So, Morgan, we're going to start with you. I want to know, what's something within your career that really broke you, that you failed at, and you had to come back from to really build yourself up?
Jumping right into it, I was a rower for a long time. I was always in the top boats, whether with the university team or the national team. After college, I went over to the UK to do grad school and to row in the Oxford-Cambridge boat race. And there's a thing called the Blue Boat, probably outside of the Olympic boats, the most prestigious boat to get into in the world. I felt fairly confident that I would make that boat in my first year. I ended up getting sick, not performing to my best, and I didn't make the boat. That was a huge, huge knock. It was a real reality check for me. In that moment, I was faced with two decisions: fight it and be grumpy about it, or stand up and be a good teammate. That year, Oxford ended up sweeping the boat races, all four events. There's two women's events, two men's events. It was part of the first reserve crew to come back from open water down to win the race. So for me, that was about finding a silver lining and reloading for the next year. And in finding that silver lining, I was elected president of the boat club for the next year. It might seem like a small one, and not even a professional experience, but more of a sporting experience. But for me, that was very foundational in how I approach failures and bounce back from them.
Do you feel like it helps you now in your business and venture capital?
Absolutely.
Jordan, you want to share your biggest failure?
Yeah, I don't know if it's a failure necessarily, but one thing was I went to Stanford, studied computer science, thought I was going to be an engineer. I was an engineer at Palantir, was first employee at this YC startup called Call9, built out their tech platform. I woke up one day and was like, I don't like coding. It was this sort of existential moment for me where I studied for 4 years to be this engineer, worked in these companies being an engineer, and then I was like, this isn't what I want to do with my life. And so I did a complete 180 and went to McKinsey of all things to focus more on the business side. It was a scary experience for me because I didn't really know what to do with my life at that point. It was actually an important lesson and moment for me because I enjoyed combining both tech and business, and that experience led me to eventually go into venture capital. It was very much an awakening moment for me and sort of a anxiety-inducing moment around having spent all those years coding, what to do going forward.
James, what are some memories from your childhood, values that your parents taught you that make a difference now in your current life?
An interesting childhood. I would say the lessons I've got mostly from it is the value of communication. What I've learned that's kind of been a compounding lesson is that it's better to be fully transparent and communicate with people on your team and externally so there are fewer surprises. There's very little people can do to help or influence outcomes if things are surprised. I say to the founders we work with that if we walk into a board meeting and there are a bunch of surprises, that's a really terrible board meeting. A lot of good and a lot of bad happened growing up, and most of it wasn't a surprise. Some of it obviously was when I was very young, but as I got older, I felt like communication and being transparent was a very good skill set. That's something I've taken. I'm not always perfect at it, and I will regularly make mistakes on communication, but that's the goal. As a group, if we're working together, things aren't a surprise.
What was interesting about your childhood?
My dad left relatively early, and my granddad functionally raised me for a long time, so he was a big part of my life growing up.
Does that give you that chip on your shoulder, the reason why you have to succeed and push forward to be a super competitor?
Part of the chip on the shoulder is these two guys who are constantly competing with every day in multiple different aspects, not just our jobs. But I definitely have a chip on the shoulder. It's funny because if you laid out the background of all three of us on a piece of paper, it'd be like super successful, has great careers, life seems good. I would describe both of these two guys as clearly have chips on their shoulders. And I know that because I know them, not because I can read a resume or a LinkedIn profile, which I can. It's interesting that in a world where like the stereotype of like white, tall, good-looking guy goes to Brown and is very good at rowing and has a very good relationship, also has a chip on his shoulder, I think all of us do. And that's a quality most really successful people have.
You look at all three of you guys, you're all same age, similar stage in your career. How do you make sure you keep the friendship intact? Because you're competing for the same deals, you sort of invest in the same stages. How do you make sure that friendship stays there and there's no animosity or anything else?
Don't all jump out at once.
I don't know. I guess two things I would say. One is it's sort of co-opetition, right? We compete on a lot of things. We also help each other out in a lot of ways. James and I just did a deal together, for example. There's definitely that component to it.
Morgan's upset he wasn't included.
We'll get Morgan on the next round. He'll outmark us. But I think VC in general can be a very transactional industry. The relationship component is really important to have friends in the industry, to talk about issues that only people in VC understand and can relate to. When we catch up with each other, it's not just about deal flow sharing, it's about helping each other out through issues and things like that. So I just think the relationship component is really important and powerful, even though we may compete on deals.
It's rooted in respect for each other. I've always believed in a race to the top mentality as opposed to a race to the bottom. When competing against people you respect, you show respect by beating them by as much as you possibly can. At the end of the day, giving your best to your competitors is really a sign of respect. James and I have competed on deals. Jordan and I have competed on deals. We've won some, we've lost some. At the end of the day, there's a mutual respect. If someone gets the better of someone on one deal, that might change the next deal. But at the end of the day, it's pushing us all to be better.
Yeah, I want to add to that. Like, there is a fundamental cost of doing business. I do believe VC can be pretty transactional. For me, and I'll speak personally, I don't feel like my relationship with Morgan and Jordan is transactional because it's a long-term relationship. You can't have a relationship, do a transaction and act in a way that you can't perpetuate forward because there's always going to be another investment and always another time you sit together, another conversation. You have to pay your cards face up, if you will. And look, we're going to do things and we're going to compete, but also we're probably going to work together on a bunch of things. And so you have to have a real relationship and kind of tell it how it is. I don't have that with everybody. That's not a list of 100 people. It's a list of sub 10. And those are the people I've just decided to work with on a longitudinal basis.
To have a circle, specifically within venture capital, is so important from everything, from a deal flow perspective, from helping each other out. Jordan, you were saying before that you guys help each other out on certain issues. Like, what's like an issue you've seen that all of you three or each of you have helped each other out in whatever it may be, in a professional, vulnerable, or personal?
I think honestly, just, as you rise the ranks in venture, understanding how to navigate different deal processes and how to navigate firm dynamics. And so I think there's just sort of common issues that come up as you rise the ranks. We've all gone through different points in our career, faced different things, made mistakes and done some things well and some things not. And so I think just having that shared experience is really helpful. Every firm operates differently in terms of getting a deal through. It's understanding what resonates, with folks on the team, how to sort of, demonstrate the values of a deal. I think it's always helpful to hear how other people have navigated their firms, and even how to sell founders, just what's worked well and what hasn't.
I want to understand the difference between like each of your unique firms of how you evaluate deals, the different characteristics you look for in founders. Who wants to take a stab first?
I think on the RedPoint side, we have a term called founder market fit, which is effectively for a given founding team, how much empathy do they have to the problem space and the customers that they're selling to. And so we take that really seriously. And why is this team uniquely positioned based on their past experiences? So we take a very team-oriented approach. And then I would say from a market size perspective, that's another common reason that we will pass on companies. We have a $650 million early stage fund, $750 million growth fund. To return a fund of that size, you need a large outcome. There are plenty of companies that will likely exit for several hundred million and be incredibly successful to the founders, their employees. But it's if you do the fund math, it doesn't necessarily work out for our LPs. And so it really needs to be an outsized return from a market perspective.
About 8 years ago, CRV did a brand audit, which is a really funny way of spending money. But alas, we did that and ended up with a new website, which we also spent a lot of money on. The thing that was interesting that came out of it was this phrase, power to the person, which is the core belief that to build an outsized company, outsized outcome, like similar to the ones Jordan described, you need to empower a type of person. It could be a small business owner with DoorDash. It could be an individual, as you think about the Twitter outcome. It could be a sim manager, as you think about Cribble, or a developer with Vercel. You have to have a very clear persona that you're empowering. We talk about that a lot when we're making investments. It's like, okay, if this works, which persona do we empower? Like, who is it? When I came in, I thought it was kind of a gimmick. I was like, this is stupid. Like, this doesn't make any sense. What's the net new bookings and what's the retention? And is this a big market? Sounds great. But it really does build up the core of the investment thesis. What does this have to look like in the future? And who does it have to empower for it to be a big outcome? That's kind of how we think about this as early stage investing. And notwithstanding, we probably all have similar metrics and power to the founder, quotients, all these things. But that's kind of what we lean on.
We're probably the most different here. I think CRV and RedPoint really started life as early stage funds and may have tacked on growth as a strategy over time. TCV has always been a late stage growth and crossover investor. Our strategy in the Velocity Fund is pulling forward that strategic lens to a subset of very high growth early stage companies. I would say that growth mentality paints a lot of our investment decision making. When we're looking at founders, what I really look for is like just an obsessive personality, right? Someone who is relentlessly pursuing a problem statement. The person that immediately comes to mind is Jason at Arise. Arise is effectively building a Datadog for AI. Even as a CEO, he spends a lot of time flipping through Datadog, just obsessively thinking about how to improve the product. I know he's doing that at 2 a.m. because I called him when he was doing it at 2 a.m. And I think that obsessiveness goes a long way. The trickle effect from that is really profound. The other thing I would say that's really important, and I think Jordan hit on it, is does this founder have an unfair right to win or solve this problem? Another great example of that would be Renan, the CEO at Avalar, recently sold his business to Zscaler. They're essentially solving a data problem in security. He himself was not a security expert, but he knew how to solve big data problems. We thought that he really had an unfair right to win there. So that's another thing we spent a lot of time thinking through. Does this founder have a unique insight or ability to tackle this market?
Interesting. So from you, we got relentless. From James, we got power to the founder. And then Jordan, more the sense of vulnerability. What are some non-negotiable characteristics that you look for in the personality of the founder?
I think grit is one of them. Startups are roller coasters with a lot of ups and downs. Being able to stick through that and get through those lows is really important. And I really like what Morgan said around sort of this like relentless sort of nature of a founder. A term that's used in venture is a killer. The context around that is someone who is just like, they have a goal in mind and they're just going to go do it no matter what. And they're just going to sort of win it at all costs. Obviously, you want someone who does that in a mature professional manner, but at the same time, someone that will work 7 days a week and is constantly thinking about this issue and is relentless in terms of this being their life mission to solve it. I think it's just something that when founders come in, the right ones, we really get that feeling that they will have that mentality around building this business into something massive. So I would say grit and relentless drive towards solving.
Who was the first founder that came to mind when you thought of the word grit right now?
Good question. I would say there's a company called Railway that I'm on the board of, founder Jake Cooper. It's his life mission to destroy Kubernetes and supplant the major cloud providers. Railway is a next-gen cloud infrastructure platform. They have 1 million developers using it, growing really fast, and he just lives and breathes that mission, just 24/7 around just changing the status quo of something. And you can really understand that. I mean, I've gotten on calls with him at 2 a.m. and he is grinding away towards that mission.
James, what's a deal that you lost that still haunts you?
The list is so long. I think the reality, without naming names, because the list is literally too long to go through, is that I'm going to lose deals. We actually call them projects, not deals, in the sense that we're working on a project with people rather than doing a deal with them. It's like a long-term thing rather than a point-of-time thing. But as I think about the answer is like, there are going to be more projects. The thing that I really lose sleep over is I'm relatively narrowly focused on the category I spend time on. And as a result, there's probably only 2 projects, maybe 3 a year that actually matter. And as a result, when I lose something, and there was one recently that all 3 of you know about, I lose a lot of sleep over it. Because if there's only 2 shots a year, and I lose one, that's really bad. Otherwise, I ain't gonna do anything for a year. So, like that's why I lose sleep over it, not to name particular companies. But the focus of category gives me a right to win, to go back to the previous point, because that's all I do. But it also adds a layer of risk, is that if I don't do the good company in that category that year, then why am I getting paid?
Good point.
But I think to add on to James, it's just a reality of the job that you're going to have your anti-portfolios of companies you should have invested in. You're going to have deals, projects that you lose on. If you don't have that, then you're not going after the right opportunities. At the end of the day, it's a super competitive industry, and that's just the nature of the job, and you just have to live with it, which is anxiety inducing and sort of there's regrets and so on, but all of us definitely have that list for sure.
There was a project that I was competing on the first year as a GP here. We lose to Square, as sometimes is the way, who were way higher on price. My partner comes up to me afterwards. He's like, "Welcome to the NFL. Sometimes you're going to stand on the offensive line and someone's going to cut right through you." He's like, "Oh, yeah, that was Aaron Donald, and I'm in the NFL." And he's like, "That's going to happen. If you're not sometimes getting cut through and knocked over, then you're probably not playing in the right sport."
You beat yourself up a lot?
I think all of us do here. Otherwise, you can't motivate yourself. If you're like, "I'm the best in the world," someone's going to come for you.
So how do you keep yourself constantly motivated, constantly learning, constantly growing? What do you do?
Every time I text one of these guys and they don't respond, I'm like, "Oh no, they must be working. I need to stop watching Netflix and go back to sourcing."
Morgan, want to take a stab and go at it?
Look, I think for me, venture is my sport now. I was an athlete my whole life, and this job is my competitive outlet. And yeah, I've been doing competitive sports since I was 11 years old. That's all I ever know. For me, this is just a continuation of that. I think you ultimately need to do the things that give you energy, and this is what gives me energy. So it's never like if I'm waking up and checking deals at 6 a.m., it's not because I'm stressed or need to do it. It's just because I love to do it. It's what gives me energy. For me, this job really is my sport now. It gives me a huge amount of fulfillment.
What would you say is the craziest thing you've done in order to win a deal?
I wouldn't say it's the craziest thing because we had done all the work, we were prepared, we were ready to do it, and our firm was in a different position. We did submit a term sheet the morning SVB collapsed, which I think a lot of other firms wouldn't have done, but that's probably the first one that comes to mind.
I saw this prompt in the pre-read, and these two guys might remember a company called Corelight, the network traffic business. I led the Series B or C, one of the rounds. I submitted a term sheet to the CEO. I was based in New York at the time, and he was ghosting me. He was not responding. So I got on a plane, and the office was in downtown San Francisco. And I went to the office, and I was like, "They haven't invited me here, and I have no way to get in." So I buzzed the office above Corelight's office and said I had an Amazon package. They buzzed me in. I go up to that office. I then walk down the fire steps, walk into the Corelight office, stand outside the conference room where Greg, the CEO, and Brian, who was the CPO at the time, now the CEO, were talking, and I wave. Literally just stand there and wave. And then, what is this? And it was at that moment I was like, this could end really badly. In that I just broke into someone's office. And I was like, "Hey," I didn't really put much thought into what I was going to say. And anyway, just start shooting the shit with the guys. Long story short, we ended up doing the investment, and I didn't go to prison. But that was certainly the most fun story in terms of making an investment.
Founders beware, CRV.
I may break into your office.
I do think it's important to note, though, it's very stressful when a founder is going through a fundraising process, but on the VC side, I have a term for it called deal heat. When you're just waiting and other people are bidding and you're in the dark, founders know there is stress on our end as well.
Yeah, you go from buying to selling is what we talk about here. It's like you're trying to figure it out, and then all of a sudden you're like, "I want to do this." The leverage flips instantly. It happens.
Jordan, go ahead. Share your story.
Yeah, I guess two come to mind. One is there's a company and we had been in front of it for a while and he didn't really want us to aggressively pursue. He wanted to take his time, get to the point that he wanted to raise and so on. Then one day he calls us up. He's like, "Hey, I have a term sheet." This firm flew to him. They had an office in London and got a private chef and did this whole extravagant experience for him and everything. And we ended up getting on a plane 2 hours later to Berlin. I ran home, got a carry-on, threw in some clothes, and rushed to the airport. Thankfully, we ended up winning the deal. It was a very chaotic experience where, like James said, you sort of switch to sell mode and sort of do whatever you need to do.
Did you cook him breakfast?
I did not cook him breakfast. I think we would have lost if I did that.
Yeah, Jordan, how are your eggs Benedict? Like,
Yeah.
this is what the people want to know.
Exactly. And then the second, actually, this was before ChatGPT and the latest LLM craze, but RedPoint would commission me to create poems for founders that we submitted term sheets to.
By commission, do you mean they pay your salary?
Now, just like, hey, can you please write us a poem? We beg you. I actually had a surprisingly good hit rate in terms of success, but I'm very good at rhyming and writing poems. That was something that I guess a crazy thing we had to do.
Actually, you still write a lot of poems and love letters to people?
It's more like funny poems, more humorous for friends' special occasions and parents and all that.
Does this
Oh,
extend into
right.
rapping?
It does. I'm not gonna do it on this, but I have rapped before for sure.
Next time we go to an SKO because someone's hit a big target, then you can do a rap for them.
Sounds good. Yeah, for sure.
What do you guys think about the current price of startups in Israel, of cyber startups, of cyber companies?
Look, people have been complaining about prices for as long as people have been investing in companies. The meme is always too damn high, but the returns are commensurate with the opportunity. So until the world collapses and everything goes back down to 4 pre, we're going to continue to invest commensurate with the opportunity.
Do you think we'll have another Wiz ever? And Wiz outcome?
Ever?
I mean, in the
Ever's
next
a long time.
decade,
I think the
I guess the next 2 decades, decade or two, I think we'll have another $32 billion outcome.
For sure.
in Israel, I would bet on that. Yeah.
Yeah, 100%.
Yeah, I think the game should be where's the line? Like, if you set the line at 1 year, would we take the over or under? I'd probably take the over. If you set the line at 5, I'd probably take the under. So the question is, for a game, let's set the line at 3.5 years. Will we have a $30 billion exit over or under 3.5 years in Israel?
You're asking us?
Yeah, I'm asking the two of you.
A little bit more time.
I would probably say no to that, but I do think there will for sure be another exit of commensurate value from Israel in the future. But if I had to put 3.5 years on it, probably not. I think there will still be very successful exits from Israel in those years for sure that are in the multi-billions. But I don't know. I mean, maybe.
Yeah, I can think of a couple.
I can think of a couple that could. Oh, yeah. I'm thinking through it.
There are a couple that could do it.
It's probably not through M&A though. You have to have like and I think that's the harder thing to say. It's going to have to be through probably public markets. The Wiz acquisition was unprecedented on so many levels. Part of that is also driven by just who the buyer was. I think replicating that will be extremely difficult. It's an N-of-1 transaction by definition.
Notwithstanding, it hasn't gone through yet.
Subject to all of
The FTC gods.
What do you guys think is broken right now in venture capital and needs to be changed? I mean,
I still think there are a lot of people on cap tables that don't add a lot of value. The easy answer would be mega funds. There's so much money and all that. I just think that's a bad answer. More capital for more opportunities to grow the pie is a good thing to me. It's a competitive thing, and maybe it's not a good thing for returns, but it's good for the ecosystem. I think the better returns will accrue to smaller funds. Like, a $20 billion fund is probably not going to return the same. But I think like people earn the right to be on cap tables. And there are a lot of people on cap tables who take up space and are net negative. The least you can do is do no harm if you're on a cap table. Like, that should be the number one rule, and then hopefully add value. But like, that's how I think about it.
I'd say the ecosystem is probably a little bit too big for what's there today, and that has some knock-on effects, whether that's just the sheer number of funds or the amount of capital that's been raised. I think value accrues to a very small number of top companies, and those deals are extremely competitive and highly priced. Not necessarily a bad thing, it's just a function of market dynamics. One thing that has stood out for me following the COVID sugar high was just, I think there was a lot more deals getting done. As a result, a lot of investors, partners had to do more deals. When a partner would traditionally do 1 to 2 deals per year, they were then doing 4 to 6 deals per year. And in that instance, I think the founder doesn't get the same experience because that partner only has so many hours a day. Where things start to break down, and I've seen it, is there's a lot of folks out there that might sit on 20 plus boards at a given time. In that instance, I think the service to the founder really suffers.
Jordan, given $100 million to start your own fund, what do you do it?
In terms of like what areas I invest in, or in terms of
Strategy areas, how would you do it differently? Yeah.
let's see. Obviously, with 100 million, I think for new fund managers going on the early stage as early as you can, whether it's pre-seed or seed, the advantage that you will have in terms of getting into deals is getting to founders really early. And I think it goes back to what James said, which is a lot of investors on cap tables now are not value add. I think having a unique value prop to the fund in terms of we are going to be the best at developer tool go to market or the best at customer introductions because we created some sort of unique network for that or something, right? And so figuring out what that creative strategy is. And then I think the more that a new firm could be in terms of defining itself as an expert in an individual area, the better. It's just in terms of even for firms like ours wanting to involve folks, if they're known for a specific type of company, then we think about them for specific types of deals. I don't know what that would be, to be honest. But yeah, it would be an early stage fund focused on pre-seed seed in a particular sort of vertical.
Do you guys think that there's way too many venture capital funds now? Because it seems like every day someone else is a new emerging manager or someone else is breaking off from a bigger fund, starting their own fund. And it seems like just endless new funds. Everything.
Not necessarily as a bad thing. It's confusing to founders because they're looking at all these different firms and trying to figure out, why is this one different from that one? But the onus is obviously on the new fund manager to prove why they are, having a differentiated product or service. And so the reality is brand building is really hard. Many first time funds won't succeed. A lot of the funds that have been around for a long time will probably continue to endure, but the very best new funds will find a way to succeed and partner with the best founders. I don't necessarily view it as a bad thing. It's part of the ecosystem. There's probably some evolutionary theory we can apply here.
At the end of the day, we tell founders a lot. It's not necessarily the brand of the firm that you're choosing, but the person that you're working with. The advantage of new fund managers is that they're not on 20 board seats like a lot of the most famous VCs are. They can give time and attention to the founder. A lot is riding on each investment they make. It's the future of their firm. And so there's a lot of incentive alignment for new fund managers. I don't think it's a bad thing at all. And I think that there's a lot of early stage, particularly at the early stage, like I said, the pre-seed seed, where it's really helpful to have new fund managers involved in deals.
James, what do you do outside of venture that builds you up and gives you,
Spend a lot of time cooking and biking is what I do outside of venture. Otherwise, this job is really all consuming. I try to spend time with friends, but the reality is like 24 hours a day, trying to sleep between 6 and 7 of those. The rest is spent working, biking, cooking, and trying to see my wife. Probably not in that order. She may not even listen to this, so people can figure out themselves.
And we should ask more. You just got married a few months ago. How's that? How's venture and marriage?
Great. Rosie knows what she signed up for. I'm thrilled. We had a lovely wedding in Australia, and it's been great. Marriage, nothing changes. Life just feels a little more significant.
Now we got to find Jordan, his better half.
Yeah, I can just work 24/7 because I don't have a wife right now.
You got to go on dates. That's where we get our edge. Where when you're on dates, we're sourcing companies.
If you source me a date, I'll source you a company. All right.
I think we could do that, my friend.
What do you think you guys have changed your mind on over the past 5 years? A fundamental belief you had in venture or your approach to investing that you recently in the past year have really made a pivot and realized that, wait, this is not the right thing, or you realize another way about it?
I guess two things come to mind. I think one is the most important thing is just being in the right companies. And so at the end of the day, being too price sensitive doesn't work. A lot of the time I'll be like, oh, I'll increase to this, but just that little bit more, I'm not willing to. But then when you look back when that company is IPOing, you always regret that. For ones you're truly convicted that this is going to be the winner in a large market, paying up to be in the winner is worth it. And then the second is just truly investing in the best teams. And I know that's cliche and something that every VC talks about, but looking back on some companies where markets change, having the right team that can build quickly, can navigate changes in the market, adapt to different situations, I think it's just waiting for those truly exceptional teams that can do that.
Most of us here have worked at multiple venture firms. I started my investing career at a firm called Insight Partners, and what matters to them is different than what matters to CIV. And I've long said that both firms could learn a lot from each other. And I think that differentiated way of thinking, and as I came here and learned this way of thinking, kind of changed and I think made me a better investor, having both perspectives. I agree with everything Jordan said. There's not one way to make a bunch of money in this job, but making sure you're constantly challenging the way that you're thinking about things and thinking about companies is like really, really important to be self-intellectually honest about investing.
I might just take a different approach to this. I think a lot of folks in venture growth equity broadly, as they are kind of climbing the ranks, they're always questioning, like, why don't we have this process? Why aren't we moving this fast? Why aren't we doing these deals? If only we could do this. If only the partnership saw it this way. What I would say is that with more time, there is a lot of wisdom that comes with some of these decision making patterns. Change is often slow, but it's slow intentionally. More important is being adaptable, being responsive rather than reactive to changing market conditions. The other thing I'll say that I didn't fully appreciate is I always thought that, managing people was easy, right? Managing people is hard. It really is. And I know that has given me a lot more empathy for, one of the things that I really evaluate with the founder is like, are these people that can essentially build these talent vortex? Can they recruit and retain the best people? Talent management is really hard, both in a company, but certainly within a venture firm.
How vulnerable do you get with the founder? Is it more about being of help for them or in general? Is it more this data approach or it's more like, hey, let's talk about what's going on behind the scenes within the personality of the founder?
I think it's hard to expect them to be vulnerable with you unless you disclose something, right? Self-disclosure is important if you're expecting vulnerability and transparency on the other side. So over the last 2 to 3 years, as a result of a program the three of us have done, I've got much better and more comfortable with self-disclosure. I think that's helped with the relationship with expecting it from the other side of the founders I work with.
How beneficial do you find that self-disclosure and vulnerability with the founder?
I think it makes the relationship better. It's unclear if it makes the returns better. We're in the returns business. But I think it makes a better relationship. Like if you called any one of the founders I've ever worked with, hopefully they would all say the relationship is exceptional. And we've had hard conversations. But shut up, Morgan.
I can resist.
Morgan's like, I call them and they don't like him. But I think it's good.
I would say overall quite vulnerable. It depends on the founder, but I've had founders that have talked to me about personal issues like parents getting cancer, to founders talking through how they don't know if they can scale as a leader, and sort of talking through their own vulnerabilities around that and weaknesses, and seeking advice there. And so it really spans the gamut. But I think all in all, I've had a bunch of conversations that have gotten really deep into the personal side that are quite different from the execution in terms of how the company is doing. I do agree with James. A lot of it comes from me self-disclosing on different parts of my life and things that I'm worried about and going through and things of that nature. At the end of the day, these relationships, especially investing at the early stage, they're ideally 10 plus years. If we're going to be spending a lot of time together, the best thing is when we can get close on a personal level.
I would just add to that, maybe the word's not vulnerability, but what I would say is you're probably going to be only really successful if you are your authentic self from the start, and either that's going to work with the founder or it's not. The sooner you figure that out, the better. I don't think it makes sense to disguise who you are when you're building relationships with these founders. Ultimately, you will be successful when you are your authentic self and they are their authentic self. I think the bigger question I always had was around, like, everyone has a brand or a style of investing and how they partner with founders. One thing that I always wanted to know, because I always kind of probably build like more personal relationships, like really try and become friends with these founders, and always balancing or juggling the professional relationship and the personal relationship, and how do I balance those two. I sat down with Brian Schreier months and months ago. I think his superpower was really building quite personal relationships with founders, and I asked him, how personal is too personal? And he said, you can never be too personal, which I really liked, right? Because I think that's something that I aspire to be, but it's not what everyone wants, and it's not what everyone would necessarily ascribe to. So I think for me, getting to the personal side is really important, and it's part of my brand, how I build relationships, how I win, how I do all of these different things. It might not be for everyone. Some people might like a clearer line between personal and professional.
Interesting. Do each of you have a mentor or someone within the venture that you look up to? You want to replicate their brand and your style, or someone you've learned the most from?
I suspect we've all got exceptional partners at our respective firms and previous firms who we want to take parts of their investing style. I think about the folks at Insight and the folks at CRV. Pretending that I'll be exactly the same as any of those, I think, is a lie. But parts of, like, folks that I look up to and I emulate. Yes, of course.
I'd say mentorship comes in snippets. Unless you're extremely fortunate to get one person who can really champion you throughout your career, I'd say mentorship comes in snippets. If you're a curious, competitive person, if you're someone who wants to move up, you're probably taking snippets from everyone all the time. So mentorship, I view it in snippets from people you know and respect, whether they're at your firm or another firm. That builds one broad mentorship bucket that you ultimately build on.
In venture, I mean, it's known as sort of an apprenticeship model. And so, when you sit on boards, you are getting your own firm's partners and seeing how they interact with founders and operate boards, but you also are on the boards with a bunch of other firms. And some people are net negative, as James alluded to earlier, and some are incredibly value add. It's about sort of recognizing the type of board member you want to be and what does work well and what doesn't. And hopefully those learned experiences over time from a lot of people sort of shape you as that investor going forward.
Would you guys ever partner up all together and start your own fund?
Life's long, my friend. That's what we're going to say. Who knows? So many things could happen.
This
I'd
would be
probably partner with James. Morgan, I don't know. I'd have to think about that.
He's always late to calls. It's really annoying.
I don't know, it's really annoying.
Call it. It's like Riverside. What is Riverside?
Rivers is actually a great company. You should have invested in.
Yeah.
And, wow. So
Podcasting technology, I'll admit.
So what's next for each of you? What do you see yourself in the next 5 years? I mean, 5 years is such a long time, but such a short time. What are you looking for, excited about in the next 2 years from investing perspective? Break it down.
Want to go first?
Yeah, I think look, we all kind of invest and compete in the same sort of waters as we've talked about. We went from on-premise to mobile to cloud and now to AI. There's probably 12 legacy, maybe more, cyber businesses that we're all chasing, trying to get big outcomes in big markets. I'm excited that there's now a new technology paradigm shift that allows us to chase that with a credible story and a credible from an investing side, but also from a customer, from a capital, from a talent allocation perspective. And I was talking to my partners in 21 and I was like, this job sucks. Like, there's no new technology, there's no new big swings. It's very challenging. And now we're seeing it. This job is amazing again. And so I think that we're all extremely fortunate to be at amazing platforms and amazing brands, and we can go swing at the biggest outcome. I think now's a better time than any of the last 10 years that we've all been investing to kind of go build big outlier companies.
Standpoint, I mean, obviously we are TCV Velocity. We are building a new strategy within a firm that's been around for, actually, this is our 30th year of business. For me, I'd say I'm laser focused on just ensuring the success of that strategy and our portfolio companies and making sure that our team continues to perform at a very high level. From a capital allocation standpoint, we see a lot of opportunity at both the Series A and B stages where we focus. We will continue to invest in the categories where we have either a differentiated view or a lot of expertise. That would be the cyber ecosystem, but that would extend to other areas of infrastructure software. It would extend to the app layer around AI. It would even extend into categories like digital health, where we've placed a lot of capital and partnered with a number of founders.
I would echo a lot of what's already been said. We obviously are continuing to invest in areas like cyber, but we've been spending a lot more time at the app layer as well across verticals that we didn't in the past. We're investors in a bridge in the healthcare space, Legora in the legal space, trunk tools in construction, and so on. And I think there's, as James said, because of the technology shift that's happening, a lot of value to be accrued in areas that traditionally we haven't seen as much value in the past. I think it's an exciting time to be in venture and for us to really focus on backing the best founders and seeing what they can do with AI.
Do you guys have your own WhatsApp group?
We do not talk about the Signal chat. It's the first rule of the Signal chat. And look, we don't add reporters to the Signal chat. We've been over this.
Something to look into. But another thing is that if you look at you guys, each of you, like, you're booming in your career. A lot of the younger generation of people that want to get into venture capital are already looking up to you. They're heroes to them. They see each of you a partner in a respective firm on a credible trajectory. What do you tell to the younger people that, in college now, looking for their internship or want to get into venture capital? What are the right steps to, not necessarily to get into venture capital, or someone even in venture capital, like in order to up their career?
When I finished grad school, I didn't have a great idea of breaking into finance and venture. I knew I wanted to end up in private equity broadly. I thought it would be a good competitive outlet, good skill set, intellectually stimulating, like a lot of aspects of the industry. Didn't know that it would be venture in the long run. But, when I left, I didn't know that like banking, you had to have like an internship secured your sophomore, junior year. And if you didn't, good luck. So I'd say people who get organized early definitely have an advantage. James went to Insight, which is a great program to go to right out of undergrad, which would be an incredible experience. But I'd say if there's one piece of advice I give people, it's that you're going to hear a lot of no's, but you only need to hear one yes. A perfect example of that is when I was trying to get out of the bank I was at, which is a small bank. They focused on transactions that none of the mid-market or bulge bracket banks would touch. Nobody would talk to me. I couldn't get an interview anywhere. I noticed that Goldman Sachs Growth Equity was hiring for an associate role on LinkedIn, and there was probably 50,000 applications for this. And I was like, that's probably not going to be something where if I just lob in a resume, I'm going to get a response. So I had looked and I actually saw that we had shown Goldman Sachs Growth a company earlier that year. It was a company called Reversing Labs. We had positioned it with a few of their investors. So I said, well, you know what, like shoot or shoot. Let me just email this guy. Little did I know that was the guy that was leaving the team, and I was trying to backfill his role. No response until the EA actually picked it up and introduced me to the hiring manager. And one conversation led to another, and that was the only yes I got. So shout out to Teddy Walker, because I truly owe my entire career to her.
Yeah, I would say two things. One is you'll get a lot of advice as to like when to go into venture, and a lot of people will say like, go get a bunch of operating experience and then go into venture. Some people will say go in right after you graduate. I got a lot of conflicting advice and it really confused me. I would say if you know you want to do venture or have a strong interest in it, just go do it. Because I think that A, it's better to find out earlier if it's for you. And then B, I think there is a lot of accrued experience that you get over time. And so that's one piece of advice. And then the second is making sure that you're going into venture for the right reasons and understanding what the job actually entails. I feel like some people think it's this glamorous job that you're working 9 to 5 and you go to these cool events and all the deals come to you and stuff like that. And it's just like not whatsoever the case. And so I think understanding the job better before going into it, and that you are constantly grinding, trying to find the next best company, trying to break in and get them to chat with you and then sell them. And then it's working with the founders after that and so on. And so I think just making sure that you're going in for the right reasons too.
James, you have a story of chutzpah, like a real story of chutzpah, somebody similar to Morgan in that way. Like you never gave up, you pushed through the doors, you overcame all obstacles.
Morgan and I did the same sport. Basically, every story that he's got, I've got it, but we look in a better color. So, like, okay, it's having one time. Anyway, look, we're all hyper competitive. We're all get knocked down and get back up again. I don't think the one story is going to be representative of the grit that I think all three of us have. But I think if we didn't have that layered experience and there's things that have come up throughout our lives, like probably wouldn't be chasing and as aggressive and as persistent as.
That's true. You got to constantly have that chip on your shoulder in a positive way. Wow. Guys, this has been a lot of fun.
To motivate you, not big enough to debilitate you.
Yeah,
exactly. I like that. Well, guys, this has been a lot of fun. I thoroughly enjoyed this. I'm sure there's a lot more we can discuss. You guys are incredible, and I'm truly honored to know each of you, honored to call each of you friends, and God willing to do many deals together. I really believe the future of venture capital, the face of venture capital over the next few decades. That's my own personal belief. So kudos to all that you do. Keep on doing the great job that you do. And I really appreciate you guys coming on and sharing your story, advice, wisdom, and everything else.